All right. Hey, everyone. Hold on here. All right. How's it going? Mark here, Mark P Markets. Thanks for joining me for another Bitcoin analysis stream, and we're going to look at other markets as well. Okay. So again, I've been streaming here every Monday. So we'll get this thing started right away. Yes, we have quite a few things to talk about. Thanks everyone for stopping by. This stream will be 1 hour. Okay. And so if I miss your question in that time, I apologize. Okay, hold on. Let me just fix something here. If I miss your question, I apologize. Okay, hold on. I will answer it. You know, you can ask me again the following week. Hold on. Okay. And again, I'm just letting you know now. So this stream will be 1 hour long. So here's the format of the stream. First, I'm going to go over the economic calendar very quickly. Then I'm going to go over the Bitcoin analysis. We're going to talk about the price action, potential scenarios, and what's within reason to expect. And then after that, I'm going to answer your questions. Okay. So now would be a good time to start sharing your questions in the channel. I am simulcasting, so people on TradingView, now would be a good time to put questions in there as well. All right. So once I get through my analysis, I can answer your questions. Also, people on TradingView, if you can't see my screen, refresh the browser. Okay. That usually solves the problem. All right. So let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Let me take this off the screen so you can see me. All right. Hey, everyone. Cool. So, all right. So let me just say a few hellos. I see Kai, I see Peter, Alex, good to see you all. Freeloader. All right. Hey, Assam, how are you? All right, cool. I don't see anyone in TradingView yet. All right, so people, now's a good time to get the party started here with your questions. All right, so let's talk about first the economic calendar. Oh, and by the way, before I get to that, I have to say really quick, this stream is brought to you by 8cap Partners, okay? They make this possible. You can see in the links in the description portion of this video, you can get some more information about them. They are a broker, a Forex broker dealer. They are located and regulated in Australia. Okay, so their competitive advantage really is they offer a lot of markets to trade. They offer CFDs and very competitive spreads. Okay, they have basically your standard spreads, and then they have like your commission based, which are going to be much tighter. That's good for people that trade more size. So you have some options to work with there. Also, they've recently integrated their platform with TradingView. Okay, so you can actually, instead of using the MetaTrader 4 or 5 platform, which is their base platform, you can actually place your trades from your 8cap account through TradingView, which is a very nice feature because TradingView, you know, the analytical choices that you have and the ability to customize your platform are basically, you know, unmatched. Okay, so I mean, I really like TradingView for its customization. So the two together, 8cap and TradingView, good combination. All right, so with that being said, let's get started. If you're interested in that, also I have some deals available with my training program. Send me a message. There's more information on the link in the description or in my signature. All right, so let's get started here. First things first. Economic calendar. There's a few things, but the only thing worth mentioning this week really is going to be NFP, and that's on Friday. Non-farm payrolls. It's the first Friday of every month. It's the most important scheduled economic event that we can come across every month. Now, the idea is not to try to think or try to figure out which way it's going to go. Okay, the idea is to mitigate your risk. So as the market unfolds throughout the week, it's probably going to get more indecisive Thursday, right? Especially Thursday afternoon into the evening. The number usually comes out 8:30 a.m. Eastern time on Friday. Okay, so just something to keep in mind. Make sure to check the economic calendar for other events. I mean, because there could be some movements here and there if there are surprises, but that's going to be the main one, all right, that the market's really going to be on top of. All right, so let's move along here. Next thing on the list, Bitcoin. So let's talk about this Bitcoin situation. I've actually been looking at it on smaller time frames, as some of you may know. But for this analysis, we're going to stick just to the daily chart. Okay. Now, I wrote my article on TradingView yesterday. Based on some of the activity I saw, I suspect it wasn't very well received. Okay, because I guess people want accurate. They want accuracy in something where there's no such thing as accuracy. Markets are random. Okay, so there's no way to know which way a market is going to go in advance. As much as people lie to you and tell you that there is a way to know, there's no way to know. Okay, see efficient markets hypothesis if you don't believe me. So basically what's going on here with this Bitcoin situation, and what I pointed out in my article, because Bitcoin's basically been out of play, all right? It's possible for markets not to be in play, not to move. Now, I'm looking at this from the swing trade time frame, okay? Not the day trade time frame. As a day trader, there's some opportunities. There's movements in here that you can capitalize on, but we're here to talk about the broader movement, right? This rectangle that I just drew on the chart, that's pretty much the consolidation range that we're in. So any price action inside this rectangle is pretty much meaningless, okay? So people are going to make a big deal. Oh, look, pin bar. Oh, look, outside bar. Oh, this, oh, that. Yeah, intraday that could be meaningful, but bigger picture, it's meaningless until one of these main levels is taken out. So either we take out 18.5, okay, or we take out 20 and a half. One of those has to be taken out, okay? And I don't know which one. I don't pretend to know. The general structure, as I pointed out in my analysis, which I don't think too many people were interested in, is generally bearish. Nothing has changed here, okay? Nothing has changed. And what I mean by that is resistance levels right there are still being respected. One here, this main one over here, they haven't been compromised. So why should Bitcoin go higher? I see the nonsense talk out there. If you're lured by emotional appeals and you think that maybe you're missing out on something because all the experts are saying so, you're going to be responsible. You just need to take responsibility for the losses that you're going to incur, because it's just a random, you're basically formulating some nonsense opinion in a random environment. Things change quickly and people don't learn. Okay, so with that being said, there's really not much to say about this price action. We can argue, oh, there's a higher low. Doesn't mean anything. It's inside this range. So as a swing trader, this is what I'm looking for. And I don't short Bitcoin. That hasn't changed. But I am open to calling shorts if I see one that's worthwhile. And the short would be here at 20 and a half. Okay, if a sell signal develops there, that would basically be a lower high. Okay, this 20 and a half area, what is this here? Yeah, about 20 and a half. All right, you have to round it to the whole numbers. So that's where I'd be looking if a setup develops. Now, right now, I mean, if you want to argue about a signal, this is an outside bar. It hasn't closed yet, but it looks like it's going to close that way. And it's a little minor higher low. So you can argue that there's an aggressive long signal or setup in this thing right now. Okay, that's a bullish setup. So what do? Do you take the long? If you take the long, that's counter trend. And you need to automatically go into that with a much lower expectation. I cannot emphasize that enough. Okay, so if you take this long, like, I mean, it would be a good idea if you wait for the candle to close and then take out the high of the candle. Your risk will be defined by the low. 18, what is that? 18.9 basically. You should probably round that to 18.5. Okay, because it can fool around in there very easily and bounce somewhere between 19 even and 18.5. Okay, you follow me so far? So if you get that buy signal, what should you expect? Is this thing going to go to 500,000 like some of these big mouth morons are saying? Probably not. Not anytime soon. Okay, so you're looking at a reasonable expectation over the coming week. You're looking at 20 and a half, and you're looking at this resistance up in here. Okay, these are proportional levels. These are levels that have proven themselves previously, and it's reasonable to anticipate that you will get certain types of price behavior at those levels in the future, unless the market proves otherwise. Okay, so I'm not speaking in absolutes. I'm basically just we're looking to define areas where we can anticipate some type of behavior, but then the market needs to confirm. If it does not confirm, then we have to adjust because we know nothing unless you have inside information. I don't have inside information, okay? I don't know Chairman Powell personally. Anyway, so that's what we're looking at. So this would area, the sell signal would be up in that area, or a place to exit your long. All right, that's ideal. This thing can easily anywhere from this entry, right? Anywhere from this candle currently to this resistance, anywhere inside this range, it can turn randomly anywhere. So you can draw all the lines you want, but it doesn't matter. The market will choose. So your job as a swing trader is to look for the conflicting signal. Okay, and you have to babysit this thing. You cannot have an opinion. All right, so that's basically what I'm looking at. Am I going to call the swing trade long? I might call this aggressive long. I mean, I prefer the long side anyway when it comes to Bitcoin. But again, probability and structure is not in your favor on the long side. That's very important. Now, especially as a swing trader, you need to keep that in mind. As a day trader, you're always working on both sides. So it really doesn't matter on the day trade time frame, because you can be long or short no matter what the market is doing. You just have to understand the order flow. All right, so that's Bitcoin pretty much. I mean, there's not really a whole lot more to say than just that. Let me know if you have any questions about Bitcoin. Now I want to start answering your questions. What is going on here on TradingView? Hey, Joel, good to see you. I don't see any other questions on TradingView, but I see some people watching. TradingView people, good time to ask me some questions. All right, so ask me about any altcoin, stock, whatever you want to see. All right, so let's begin here with Kai. Interesting times, gold against the dollar. Okay, so gold against the dollar. Let's first take a look at the dollar index, okay? Because the dollar has been an important catalyst in recent times, whether you're in a Forex pair, whether you're in Bitcoin, or in the stock market. This is important. A lot of people have been talking about the dollar. Okay, this dollar situation, as you can see, this is not a trend reversal. It is just a pullback so far. I talked about this earlier today. This green candle is a simple attempt at a simple reversal, which, like I was telling in my earlier video, I don't like simple formations like that. As far as the next long, I want to see how today's candle unfolds. Well, look, we have a bearish outside bar, which tells me that the dollar may have some more room to retrace. Okay, so maybe we're looking at this area here over the coming week as we get closer and closer to non-farm payrolls. This would be a good area for a new long signal to develop. So what does this mean in terms of things that trade against the dollar? Well, let's take a look at gold. All right, first, because Kai wants to see gold. Right, so I would be looking for the long on the dollar. Now look at gold. Right, so gold is getting out of hand here. It's starting to, what's up 34 points today. So I'm sure you're going to get a lot of gold experts coming out saying the bottom of gold is in. It's going to 5,000. You've heard that story a million times. You should know better right now. Here's the interesting thing with gold, because we've been watching gold, and it was in this resistance area, which I was not very interested in going long for that reason. Okay, now it cleared the resistance area. That's nice. It's the first time. It's been a while since gold has cleared a resistance. Now you have the next resistance here in this area. You see that? And it's based on this level back here, and it's just testing it basically now. You see that? So again, bad time to be chasing gold. You don't want to be buying this now. And this, again, is when all the clowns come out and tell you that gold is just getting started. Don't get sucked into emotional appeals. By the way, getting your attention is really what makes money in this game. A lot of these people who claim to trade, they don't trade. They monetize your attention. Stop giving them your attention. All right. Look at the level. The price does not lie. This is a resistance. Why would you buy now when gold, came off of this level? Obviously, reaction to the dollar here, and dollar is getting ready to. It's preparing to get into a support area and may give us a long signal over the next few days. That's within reason. So bad place to be buying gold. If you're going to buy gold, wait for the pullback. Okay, wait for the pullback, or at least a continuation pattern. Back here in this area, this is a continuation pattern back here, but a very hard one to take because you're right inside of this resistance. So you have to basically have the confidence and the attention, because if it goes wrong, you have to get out of it quickly, right? But this went, if you got long, great, it went your way. Easy to see after the fact. So as far as right now, gold, no longs. All right, I would wait for the pullback if you're interested in a swing trade long. Now, I would still be open to shorting gold. All right, Joe, just like the euro, I have to check the euro. Earlier, it was trying to set up for a short. I have to see where it is now. But over the next week, if an inside bar develops or a pin bar, a bearish pin bar in this area, this is a resistance. It's a great place to find short setups. Okay, I would be open to shorting gold with the CFD. It's a short-term instrument. So keep that in mind. Now, I pointed out earlier too, if gold is going to change its tune, which maybe it is, okay, but it's still a little too early to tell, and you want to play long range, long-term gold, look at stocks, right, like Newmont Mining, right? Now it's starting to go. It's starting to improve here. If you've been accumulating small shares like I've been talking about for months, okay, I mean, going all the way back here to the beginning of August, you've accumulated in a nice little range that was just working its way lower and lower, slightly, and now your position starts to show some green, right? That's how you play the inventory game. But that's why small bites protect you in case you start playing the game too early, like up here, okay? So keep that in mind. But gold has been giving us nothing but sell signals in a strong, in the face of a strong dollar. Now maybe gold is turning around. We have to see, but don't form any opinions. Let gold prove itself. All right. So anyway, that's gold against the dollar. I hope you found that helpful, Kai. All right. Let me see what I have going on over here on TradingView. Many people say it's not a good time to buy the gold, not a good time to short the gold and silver. Well, you see, if you don't understand price and price action and structure, you can't go by what other people say, like I just said. So, like I said, I'm open to shorting gold, but there's no reason to short gold right now. But I'm open to the idea. The market needs to prove itself. I don't pretend to know the market. The market tells me, and then I listen. I know nothing. The market knows everything. Okay, so a lot of people, they like to think that they know more than the market. Be prepared to donate your money. Okay, SPX, sure. Chinese man. All right, SPX. Yes, let's see where this S&P is. So, okay, nice. This thing is up 100 points today, okay? So I don't care the reason. Reason doesn't matter. I talked about this earlier today when we were evaluating the market open. This situation right here is a failed low, and I warned that the squeeze is very likely, okay? So that's what this is, the squeeze. It's a failed low. This is a highly likely area for this type of situation to occur. It's an outside bar to go long, okay? So this is a buy signal. Now the question is, and maybe that's what's helping Bitcoin along because they are correlated. The question is, how far can this thing reasonably go over the coming week? Keep in mind, it could turn at any point, but what we want to see are important resistance levels, okay? So your first level really is going to be this low right here. 38.86, so basically high 38s, possibly low 39s. That's ideal if it can work its way up in a straight line, which, kind of like this price action back here. But, and short squeezes can look like that, and they can be very irrational. The main thing with a short squeeze is don't get sucked into all the hype that surrounds a short squeeze. They're going to tell you that the market's in, the Santa rally has started early, and all this other kind of nonsense. Don't pay attention to that because then it plants the seeds in your mind of an opinion. You have to keep a very open mind, and you have to basically trust the price because price knows everything, like I said. So right now, this is a long signal. In fact, I may call this one, for anyone that's interested in swing trades on the S&P, again, you can play the CFD, you can play the ETF, right, the SPY. And the thing is, what's the risk and the reward? That's really like the next question if this is a buy signal, because it's a pretty wide outside bar. I mean, overnight, this thing was pushing lows, and now it's closing on its highs, right? Too many shorts. So 35.59, what is that? 35.59 is the low. So basically 35.60, and this thing's at 36.93. So what is that, like 150 points? So your stop would have to go somewhere around that low. So you need to make at least 150 points in this thing. Is that within reason? Well, yeah. I mean, what's the high here again? 39, right? So if you're buying it at 36 or 37, that's about 200 points. Again, you're looking at over a multi-day period. That's within reason, okay? That is if this thing can sustain itself. Keep in mind, nothing has really changed. Okay, here's what I mean. When I say that, people don't understand what I mean. Let's take a look at this real quick. Okay, because this is what you need to pay attention to. So the bond market looks interesting, right? And it looks like it's turned. It looks like it's, a bottom is in, right? We have a bottom right there. It took out this low recently, and it's reversed, right, pretty quickly. So that looks promising, and you're going to hear a lot of talk, right? Rates have come off, bond market, blah, blah, blah. The Fed is being backed into a corner. They're going to have to lower rates, blah, blah, blah. All nonsense opinions. Again, if you don't get the message, you're never going to get anywhere in this game. So while you can argue that the bonds are trying to turn, they got a long way to go, right? First of all, they have to clear a resistance, which they have not done yet. This movement right here is a minor resistance. It doesn't count, okay, in terms of the bigger picture. I mean, look at the bigger picture on the bonds, okay? This is a weekly chart. There's really nothing bullish about this, okay? So while we may get a bullish movement, maybe for a few weeks, it's got a long way to go before it can prove anything, all right? I mean, look at this movement back here. This had a lot of people fooled too. And eventually it worked its way to new lows. So this could be a temporary bottom, we'll see. But it takes months for the bond market to prove anything, right? So I'm not making any judgments based on this. Basically, from my perspective, I'm looking at it as not a whole lot has changed yet. Maybe things are beginning to change, but I'm not going to start, aggressively investing in stocks and all that other stuff. I'm still going to keep my very short-term oriented point of view until I see evidence in the bond market, okay? And it's just not there yet. This is too early, all right? So anyway, I wanted to point that out because that's very important when it comes to investing, and it's important when it comes to forming your expectations for swing trades. So basically, you have to ignore all the nonsense and all the hype and all the experts and all the news, and you have to look at the levels, and you have to formulate objective expectations based on price structure. And then you let the market prove itself or not, okay? It's a very passive mindset, and a lot of people have a hard time with that. Okay, so let me move along here. Peter, it seems like me that the EU and the UK are in big trouble, and the US economy will perform much better. All right, so look, again, Peter, no opinions. Okay, that's you get yourself into trouble because then you start to think, well, I kind of see this and I kind of see that. And just look at the price action. You want to keep track of the economies, follow the bond market. The pound had some problems recently. I know I read about that when they have to jump into support their bond market. Watch the bond markets, okay? Because that's really going to be a sign of who's doing what. And this, while bonds are being bought right now in the U.S. here at the 10-year note, that's really, like I said, not enough to make any judgments. What will be enough? Well, for one, this thing is going to have to prove that it's not making lower lows anymore. So I'd have to see a pullback, perhaps test of low, perhaps double bottom, perhaps a broader higher low, that would put us into a range bound situation. That would be I would be more open to the idea that maybe the bonds have bottomed, okay? But it's still too early. I don't pay attention to experts, okay? I pay attention to levels and price because price knows everything more than the experts. All right. Hey, Alex, freeloader, interesting times. Which straw? Okay. Yeah. Who knows, right? I don't try to predict the future. I don't try to think, right? People say, well, I thought, I'm thinking. Don't think. Let the market do that. That's the market's job. Then the market will tell you what it wants to do. Okay. And then sometimes it'll mislead and give you a fake out. Okay. You adjust. Right. So that's why you're always watching risk, not reward. You're watching risk and always trying to keep a realistic gauge of expectations. I just saw a headline when I was working on something before. I saw a headline just to talk about expectations on Cardano. I mean, again, people just don't learn. Okay, again, Cardano was one of the most hyped nonsense altcoins. Okay, and now they're hyping it again. And how many people are going to pile into Cardano because their founder comes out and he talks about some nonsense? People just don't learn. Okay, and the people that do learn, they lose all their money and then they leave the game and they're replaced by new people who don't know what they're doing. So the market never learns. That's what I suspect is how the cycle works. Okay. Let me see here. Okay. Yeah, that's right. Why, like Joel says here, that's why I don't pay attention to why. I don't care why. I don't ask why. I ask where. Okay, that's all I want to know. Where? And can I take a risk here? Yes or no? And how big is that risk? Is the risk too big for me? Yes or no? Those are the questions I look to answer. I don't waste my time looking through news trying to figure out why. Okay. Can you check out USD PKR? Okay, sure. That's an unusual one. Not one I check often. PKR. What is that? Oh, okay. Pakistan rupee. Interesting. Let's take a look. So I'm going to go to the weekly chart here. So this is the rupee against the dollar, the Pakistan rupee. Clearly inflation, right? I mean, with the dollar, actually, so what's going on here? This is dollar against rupee. Oh, okay. So dollar going higher, rupee going lower, basically, right? Is what's going on here. And it's basically, this is the dollar. You're looking at the US dollar. This chart is a reflection of the dollar. So with dollar pullback, right? Look, you have this double top up here, but don't get too caught up with technical patterns on something like this. The dollar is generally strong. This chart is likely to continue higher. It's the US dollar. So your low is over here, right? Which coincides with the dollar index, 213.44. I would anticipate that price is going to stay above that, okay, and form a double bottom or a higher low or something along the way, and eventually attempt to take out this high, okay? So either, again, there's no way to know in advance, and a chart gives us absolutely no advantage. All we can do is formulate some scenarios and measure risks, right? So at this point where it is right now, you're at a midpoint, a very highly random area, bad area to do anything. And this is a weekly chart. So if you're looking for longs on this thing, if you're playing like the Forex pair, you're looking for some sort of test of this low or somewhere near that area, right? And also you should be watching the dollar index. If you're looking for shorts, you're looking for another test of high, but just keep in mind, the short side is the wrong side, or it's the aggressive side. It's counter trend, because there's nothing bearish about this. People get all excited about a double top, but a double top is not necessarily a trend reversal, okay? It's just a momentum, a temporary, it could be just a momentum, a temporary momentum reversal. All right, it's a good question. Thanks for bringing it up. Okay. Oh, hey, Han from the Netherlands. How are you? All right, student. I mean, how could I miss your question there? All right. So got the PKR. I jumped out of my SQQQ. Okay. Looking to get back in. Maybe look at SQQ for a bit. Okay. So let's take a look. Well, so SQQQ. All right, that's the short, leverage short ETF. So this thing basically is going to be the opposite, right, of the Qs. So if this thing's going higher, that means the Qs are going lower, right? If this thing's, if the Qs are going lower, this thing is going higher, and it's what, 3 times leverage or whatever. So I mean, so this is more of a short-term oriented instrument, and it's sort of like, you can think of it sort of like a gambling instrument. Certainly something you're not going to hold long term. So yeah, you know what, Joel, I don't blame you. This is right now, this is an inside bar, and this can easily turn into a more dramatic pullback, as we saw with the stock market, right? So you're looking at something like this, but again, you don't need to look at this chart. What is that? 49.37. So basically $50 area. You don't need to look at this chart. You can just look at the NASDAQ chart, right? Or the QQQ chart, and that's going to give you the answers for this, because this is a derivative of that. Okay, makes sense? So we're basically looking at the same chart. This is just the inverse. So thank you for asking. Let me jump over to YouTube over here. All right, let me see. Okay, Alex, ZN touched every target I said. Okay, it seems that a lot of people looked at that 2618. Well, so Alex, look, the 1618, 2618, those are inflection points, and using the projection tool, which is what you're using there, can be very helpful when a market really starts to get like in an area that there's no history to work with. They work as good points of reference. So thank you for bringing that up. Yeah, I remember you were talking about that a week earlier. Thanks for mentioning. Okay, so watching live. Oh, cool, from Ghana, West Africa. Oh, I forgot to mention. Hey, if you want to mention what country or what city you're from, it's always a fun fact. Ghana, thanks for stopping by. I think I've had a guy in here from Ghana or Kenya one time or something. I don't get too many people from that area. Thanks for stopping by. Okay, hey Jimmy, how are you? Oh, from Mallorca. Hey, all right, cool. Ethereum, sure, no problem. How are you? Spanish island there. All right. That's nice and exotic over there, right? Palm trees and stuff, I think. All right. Anyway, let's take a look. You want to see Ethereum? Sure. Now, Ethereum, everything that I said about Bitcoin is pretty much going to be the story with Ethereum. The only thing that we get from looking at the Ethereum chart really is going to be levels, right? Let me see. Is this the chart I want to look at? That's not it. Hold on. Is this it? That's it. Okay. So what we're looking for here, and it's going to be similar to the Bitcoin story, maybe some slight variation. So here's Ethereum, right, on the daily time frame. And look, I mean, it's been consolidating in a very similar way. Ethereum is not as weak, relatively speaking, compared to Bitcoin, because, I mean, look, we're nowhere near these lows over here, okay? In fact, it has found support at this old resistance, which, you know, my students should not be surprised about that. This is why we always check broader time frames, right, and look for these levels. So anyway, it found support there. But again, it's also coincidental to Bitcoin, right? So if Bitcoin had not found support, this thing would probably be breaking. So as far as this goes, you're getting an outside bar, green outside bar. You have this consolidation low. It's an aggressive long. So, you know, when a situation like this, if you're looking for a swing trade, you don't take everything long. You don't take Bitcoin, Ethereum, XRP, and the whole group of them long, because it's all the same trade. You pick one that you like, one where, you know, the risk of each one is going to be not exactly the same. Each one is going to have its own risk parameter, right? So you have the outside bar here. You measure that, and, you know, your stop would have to go somewhere around there, or maybe outside the range if you want to be a little more lower your chances of getting stopped out, because this thing can get noisy. If the high is taken out of this current candle, again, listen to what I say, right? Because the buy signal is developing, but the candle is not closed. The candle must close and then take out the high. Then you have the signal, okay? So you wait for all that, then you put your stop, right? Then you're in this thing, and you have to see if this thing can go somewhere. Your first resistance is here, right? This old support at, what is that, 1423. So you can round that to basically around 14 even, something like that. So if you're buying this thing at 1316, I mean, or a little higher than, what's the high, today's high? It's 1330. So you're looking at like what, maybe 70 points, maybe ideally 100 points if you can get a little momentum going, okay? And your risk is basically going to be the size of this candle, which is, what is that, 1330? So that's about 60 points of risk, something like that. I mean, that's where you want to keep your reward risk should be greater than 1 to 1, if anything. Okay. Sometimes in these situations, 1.5 to 1 is acceptable. You know, but that's going to depend on you. But the mistake you don't want to make is don't think that this is, oh, I'm going to make 5 times my risk. Don't think that, because this market, while they may be poised to turn, it's too, you can't make that judgment now. We'll only know in a few months, right after, if this is really the bottom or not. Okay. So that's why you have to be constantly keep your mind open and constantly adjusting, because this thing can turn right around. All right. So understand that. Oh, TradingView sent me 200 coins. Oh, thank you so much, TradingView. Who is that? Is that Cheplik? Thanks so much. You don't have TradingView can afford it. You know what, TradingView? You should give me a free membership. How about that? I always get aggressive with TradingView. I'm sorry, I'm joking. Thank you for the they're going to take the 200 coins back because they can. It's their coins. Okay. Anyway, thank you. Thank you so much, TradingView. Whoever that is over there. Thank you. I appreciate that. Okay. That's a lot coming from TradingView. All right, cool. So let me see. So that was the ETH question. All right. Was it a fake breakout on the SPX and NASDAQ? Kim. So what do you mean? A fake breakout on the long side? Let's go back here. Let's go take a look at the NASDAQ, right? NSX. This is not a fake. I mean, it was a fake on the short side because it was pushing lows. I'm gonna remove this message. Thank you again, TradingView. I really appreciate that. Okay. It was pushing its lows overnight. So, I mean, if anyone got faked out, it was the shorts. All right. And that's what causes this type of movement. And that's what can lead to further momentum if too many people were short on those lows, because now they're getting squeezed, margin calls, margined out of their position, right? And the next candle, what you want to see in this movement, the next candle needs to look like this, right? It needs to be strong. If the next candle is red and an inside bar, that's not what you want to see. That would be what wrong looks like, as I was describing in my article yesterday. Okay, so anyway, I hope that answers your question. Let's move along here. Okay, so Levent from Turkey. All right, hey, welcome. Good to see you again. I've seen you before. All right, hey, Luna. Okay, cool. Hey, Luna, thanks for stopping by. The hardest thing sometimes is not to take any trades and wait until... Good point, Luna. You know what? I'm going to show that. That's a very good point. So Luna says the hardest thing sometimes is not to take any trades and wait until there's something very obvious. Very good point. That's called patience, okay? Flat is a position. And sometimes when things are very confusing, or if you really have doubts, don't trade. You can't lose if you don't trade, okay? You can't win either, but this is a very hard game to win. And chances are you're going to lose. So staying flat a lot of times is a good idea, okay? Especially for most people, if you're relatively new, staying flat would actually be better than taking a lot of trades. More is not better in this game, okay? You really have to have a very solid, like a step-by-step process when you're taking a trade. People don't have that. They just look at they feel it. Oh, this feels right. Oh, I read this, and oh yeah, I agree with that. Oh, that makes sense. And they start applying logic to something that's completely random. They don't realize market is random, okay? And what they're looking at is usually old news to begin with, right? So whatever they think is completely irrelevant, and they're looking at everything the wrong way, and they're usually looking at the wrong pieces of information, and then they're letting their misconceptions shape that opinion, right? And that all goes on in their mind, and then they can't figure out why they never really make any money. Sometimes they make money, but they can't figure out how, right? It's because the market is random. That's how come that occurs. So in order to get ahead of random, the first thing you need to do is get beyond your own human nature. That's the first obstacle that holds you back. Never mind the industry and never mind all the other obstacles that you have to face. Your biggest one is yourself, and that's human nature, okay? Markets are, it's possible to pull consistent profits out of a market, but that's only because human nature continues to stay the same. That's what we're really looking at here. It's human nature, okay? And it's expressed in price action. That's why I tell people, I trust the price. I'm basically looking for patterns of human nature because human nature is your biggest flaw, okay? So you have to think opposite. It's very hard to do, especially if you're newer at this, okay? And the process begins by trusting the price and respecting it and realizing that price knows everything that's going on in the world and you know nothing. So you trust the price, okay? All right, let's see. Seems like the rally short squeeze was because once again, the market is expecting the Fed to pivot. They do this every month. Okay, so yeah, freeloader, whatever the market's expecting, you know, that's cool, but shorts got squeezed, right? That's what, there were too many shorts. This is the way I look at it. I look at it from an order flow perspective. There were too many shorts. They got squeezed and nothing really has changed. What if the Fed does not pivot, right? I saw some stuff. I heard some stuff about that where the market is going to force, if the market gets too ugly, the Fed is going to have to let the gas off the pedal. They're going to have to cool off with their rate hikes, right? That's what the market is trying to, that's what the market wants. But what if the Fed is like not changing anything, right? We don't know. Unless you know Jerome Powell personally and you know what he's going to do, you don't know, right? So that's why I never go by that stuff, okay? All I know is market is generally weak and resistance levels are still a game to play, okay? So far. It can change, but so far, right? And if it changes, I adjust. I don't have opinions. Okay, freeloader, WTI. Yeah, so I was looking at this earlier. Oil is a great example of what wrong looks like, okay? Because on Friday, I was pointing out oil, there was actually a sell signal on Friday. Now, you got to kind of be crazy to go short oil, you know, going into like a Saturday, Sunday when so many, it's a very geopolitical sensitive market and so much can change in that period. So it's a very high risk. Anyway, there was a sell signal followed by reversal in your face, okay? So this is when you take a short, and I was actually looking at the euro for a potential short. If I short that euro and I see something like this, I'm getting right out because that is not bearish momentum. And now look where it is now. So while oil, again, is just reacting to the dollar, it seems like everything else, right? Gold, everything else is looking nice and strong. But you have this resistance level right here in oil. So what is that? 85.02. Is this the right market? Maybe I should look at USD WTI to get the actual prices. This level right here, it's the same chart. Okay, it's just the pricing is not the same. 85.72, right? That's basically your resistance level on oil. So if oil rallies up to there and it produces a sell signal, that can be a swing trade opportunity on the short side. Okay, something to keep in mind, because again, this trend is far from changing. It could be the beginning, but we've seen a number of could be beginnings in recent months, right? And all they do is establish another lower high and eventually test the low. Will that continue? We have to see, okay? If the dollar pulls back dramatically and the dollar changes its trend or its tune, then you'll probably see these things start breaking resistances and forming a new, at least short to midterm trend, meaning higher lows and higher highs. Now, keep in mind, this is the month of October, and seasonally, this is generally a bearish month for the stock market, okay? So it wants to start out with a short squeeze. Maybe it's setting up for a bigger short. I don't know. But I do know that historically, it's a generally bearish month. Now, at the bottom of this month, whatever it puts in that bottom, keep in mind, seasonally, November and December are what? The Santa rally months, right? Now, we're in a much more economically depressed situation than we were a year ago, right? And we have rates that keep rising and rising. So if there's a Santa rally this time, again, I would keep my expectations limited, all right, until we see lower rates. Lower rates means easier money. Easier money means people have more money, and it finds its way into the markets, especially speculative assets, right? That's why these things like tech stocks and penny stocks, they get so beat up, because there's no easy money floating around, right? The Fed is taking it out of the market. All that stuff that we saw these previous 2 years that got everyone to think that markets are easy, that was just all free money floating around. That was just a lot of stimulus money chasing the markets, okay? Inflation. Anyway, all right, good question. Let me jump over to the other chat here. Come on, I got TradingView watching me over here. I got to make sure I don't use any bad words. Okay, so let's see here. So Han says more people should do your. Oh, I appreciate that. Not expensive, and they get right mindset and right. So thank you, Nan. I appreciate that. Nan, you're probably going to get kicked out now because TradingView. I think you just violated house rules, but you're actually allowed to do that. I can't. Anyway, thanks for mentioning that. Okay, so let me see what else we got here. Any other questions in TradingView? Let me know. Still got some time here, people. Ask me when you can. So let's see. Ford. Ben wants to see Ford. F. Are you effing serious? Okay, I'm joking. Let's take a look. So let's take a look at the weekly chart first. Now, Ford, look at this weekly chart. So Ford sucked a lot of people in, right? I remember when Ford was going, oh, there's no Fords. They can't keep up with their demand. Nonsense, okay? So look at that. This is not a coincidence right here, okay? This was a resistance at 1645. This is not a coincidence. Bearish pin bar, 1645. Now, of course, we're looking at this after the fact, so it's easy to see. But I can tell you, if I was evaluating this at this time, I would say we are at a resistance and there's a bearish pin bar. At least one thing is for sure, don't go long, okay, if anything. So now it's pulled back. This is a lower high. In fact, you can argue that it's a giant head and shoulders pattern, but I don't put a lot of weight into those patterns because things can change very quickly, right? So don't really get too focused on that. We are back at a support level on Ford. So that is a point of interest. But the problem is there's no bullish setup, okay? So it's trying, but the week just started. So it's too early to say anything. Now, let's look at a daily chart. So I would not, with that bigger picture being said, Ford is generally going to follow the market most likely, right? It's a market stock. So, you're looking at the industrials for something like this, because I would imagine Ford is part of the industrials, or at least S&P or one of those. So yeah, bullish pin bar, maybe you get a temporary bounce, But I don't know what your plan is for something like this. As far as investing, yeah, we're at market lows generally, but until rates really change their story, only small bites, because Ford right now is what, 11, almost 11 and a half. It can go to 8. It's within reason if the S&P goes to 3,000, right, or something like that. You have to account for the risk. We don't know where these things will go, but you have to account for the risk. So if you're like, man, if it can go that low, I don't want to have too much size on. Good idea. Get smaller, right? Stay small. So that's the bigger picture. I mean, is Ford a bad company? No. I mean, we know who Ford is. The thing is, short term, though, you may get that bounce, right? So if you're interested in the swing trade, you have the bullish pin bar. It has to close. Is the market closed? It closes in 8 minutes. Takes out the high of this pin bar tomorrow, basically 1160. You may have yourself a nice little swing trade on your hands, okay? But again, is Ford going to go all the way back up to 16? Probably not anytime soon. So if you can get like $1 or $2 out of this over the next 2 weeks, if the S&P works with you, then it may be worthwhile. But keep in mind, you're going against the general momentum. So the more conservative thing to do in a situation like this as a swing trader would be to look for the short, okay? And that would be at the resistance. This is the resistance because you have a gap over here, okay? Typically, gaps act as support or resistance. You have this gap, so that would be a good place for a short. This is a great one to play with options, by the way. Like right now, you could sell a put. I'm not going to get into options. I'm not going to explain them. But if you know anything about short puts or vertical spread, this is not a bad place because they allow you to be more aggressive and step in front of these things. Or you can wait till it gets up here and play with it there as a short, the short call side, okay, or bear call spread or whatever. I'm not going to get into those details. Keep in mind, this is going to trade with the broader market. Use the broader market as your gauge, especially short term. All right. Thanks for asking. Let me see what else we have here. Santa Rala started early. Yeah. Okay. Hey, Travel. Hey, how are you? From Italy. Buongiorno. I haven't seen you in a while. I'm sure you're very happy to see Bitcoin at these levels. You always tell me how happy you are. All right. Let's see what else we got. Toby. Okay. I appreciate that. Thank you. Tesla. Okay. So TSLA. So, how much is this thing? 243. Okay. So I was warning someone about this. Now, I pressed that by mistake. Okay, hold on. So look at this, right? This broke an important support. Now, this is interesting that, what's this thing, minus $22? What was like negative, what's that, earnings report or something? That certainly looks, it's gapped and it's $22 lower. Okay, so, and that's while the S&P is up 100 points. So the S&P wasn't even affected by this. That's interesting. So there must have been some very specific company news. Okay, I don't know what the news is, but the chart says something, right? Now, this is going into this area right here. This is a weekly chart, by the way. Okay, so let's go to the daily chart. So the daily chart, again, this is how it starts out the week. For whatever reason, there's bearish momentum there. My suggestion, again, I can't give you trade advice, but my suggestion is it's a support, but there's absolutely no reason to buy this thing right now. Okay, this is a bearish candle off of a gap. The momentum is bearish. So stepping in front of this thing is extremely risky. Okay, this thing can go straight to 200. I'll buy some at 200. It can go to 150. Okay, I mean, not like right away, but it can work its way there. That's a lot of momentum. It's coming off of a lower high and it broke a significant support area. So what to do? Well, shorting it is also a bad idea. Okay, especially we saw that market trying to bounce, right? This thing can find some buying over the next few days and just kind of stabilize, right? So you don't want to short into the bottom of that. So the thing is, you're at the support level. Wait, if you're looking for the long side, right? Aggressive long, because you're fighting the structure here. Wait for an inside bar or wait for a bullish pin bar, okay, over the next few days if you're going to play this on the long side. And then look to see if price can go back and test this gap or this old support, because that's your next level, right? That's the level you're dealing with right now. It's either you wait for that, try to play that scenario if the market delivers it, or you're looking for the sell, the short up in this resistance, right? So again, it's going to be tricky because, Tesla has been following the market and now it's doing its own thing. I don't know why, but that's when you're dealing with a stock like this, I mean, that's that's what you're dealing with. So at the moment, there's nothing there. Wait for the bullish reversal if you want to do something bullish. Otherwise, you should be looking for the short. What if you're long this thing? I don't know what to tell you if you're long. I mean, hopefully you don't have a lot of shares, and but if you're looking for investing, hey, here's a low, but small shares, because again, this thing can get cut in half. The market hasn't even, where is this going to go if the S&P goes to 3,000? If this thing is acting so weak right now, keep that in mind. All right, so that's all I can really say about Tesla. Thank you for bringing it up. Okay, XRP USD. Okay, what's going on with that one? I know there was some news a week ago. We were observing this thing, and it was interesting. Let's go to the weekly chart, right? So XRP had this news. It formed a bearish inside bar since over the previous week, right? Which is actually a sell setup, but it hasn't taken out the low. So this can turn into a higher low. So how you want to play this is really going to be up to you. Now, let's take a look on a smaller time frame. Let's go back to the daily chart. This is a higher low developing here, right? Like a nice pin bar a few days ago, and it's trying to do it again. So you have a consolidation. In fact, for people that like to count waves, right? This is a 1, this is a 2, never went below 1. This is a 3, and this is likely a 4, okay? And it's nowhere near the top of 1. So this is a potential, this is a possibility for a wave 5, okay? This is basically, that's how you use Elliott wave. That's the most effective way to use it. And wave 5 can take you there realistically. We don't know if it will, but it's within reason to make the higher high, which would take it above 55 cents. So maybe into the high 50s, maybe low 60-cent area. Now, keep in mind, it's not likely to do this, right? A straight line. That's what everyone wants. That's what everyone hopes for. But if this thing starts to jumble around and hold, maybe it starts to work its way higher, right, over the next couple of weeks. Again, this one seems to have some news keeping it going, right? Also, with Bitcoin trying to stabilize, maybe this thing can capitalize on some of that momentum as well. All I can tell you is if you're interested in the long, right, you're going to define your risk from 41 cents. That's the range low right here. Okay, that's where you're going to define your risk from. Right now, this thing's at 45 cents. So, you're looking at 5-cent risk. Obviously, you're going to play this thing with more size. It's going to depend on your account size as well. But there's some swing trade possibility in there. I personally would prefer to work with like an Ethereum or Bitcoin. I'm not a big fan of this thing. These altcoins are usually better for investing anyway, long term, right? If you're going to play that game, that's where the money is made. These things waste a lot of time with a lot of false signals, and they go nowhere. Okay, so you have to look at these also overall as a sector. Okay, and until rates really start coming off, these are probably don't have much potential. So don't get any grand ideas with XRP. If you're going to play a swing trade, keep it like that. Keep your expectations contained until rates come off. When rates really come off, I'm not talking about what we just saw today with the bond market. I'm talking about over the next 5 months, rates really start to come off. Then I will be looking for more aggressive moves in the altcoin space. And then it's just a matter of picking the ones with the least amount of coins available, or the ones that have the most marketing and most hype, and then piling in on some of those and seeing which ones go. I mean, because it's still a random game, right? The ones that were popular in the previous run are not likely going to be the ones that outperform in the next run. In the next run, it'll probably be coins you've never heard of, right? That's usually how it goes, right? So the opportunity is always where you don't expect it. Okay, so thanks for asking. Let's move along here. I got a few more minutes, all right? I'm going to answer as many questions as I can. So thank you for XRP. Hey, Steen, how are you? All right, Alex, a lot of people are talking about how it could be okay. I don't care that much, but too many. Okay, so Alex, yeah, again, I don't pay attention to what people talk to, right? It's just what they talk about. That's why I don't pay attention to things like Twitter. It's just one moron, big mouth after another, after another, after another. And, man, it gets old really fast. I pay attention to price. If that's the case, what you just said there, then the price will let me know. Okay, that's why they're expecting the U.S. Fed to pivot. As far as I'm concerned, the Fed isn't letting up on rates. Okay, yeah, well, it's up to Powell, right? Powell has the answers because it's his choice. All right, the Fed was very clear about continuing rising rates, even 2028, may have some liquidity. Right, keep in mind, it's not the Federal Reserve's responsibility to bail out a bank. It's not their job, right? Their job is to basically regulate the economy and control inflation and regulate the money supply. There's nothing in their mandate that says that they have to bail out banks. So if they don't care, they don't care, right? I mean, again, that's going to depend on how aggressive or I should say how liberal or how conservative they are. If they're going to be very liberal and they want to start giving free money to banks, well, who knows, right? I don't pretend to know what the Fed is going to do about that. But anyway, one thing is for sure, it's not their responsibility. And of course, politics plays a role in that. Okay, so let's see here. Let me jump over here. Okay, Steve, good to see you. Hold on, let me just jump back. I missed some questions here. Okay. Hey, Matos, how are you? All right, I remember you now. Okay, I'm sorry I missed your question. How to mention a book, so I'll ask Maria, which books would you recommend for the beginner trader investor? Which books? I get that question. There's a particular book, and I can't remember the name of the book. I think it's called Technical Analysis for Financial Market Technicians. I believe that's the name of the book, but I don't remember exactly. It's not a new book. It's an old book, and it's a hardcover textbook. It was one of the books that I had to read for my CMT exam, and it's a very good book because it looks at all these aspects of technical analysis, and it looks at them from a very statistical and objective point of view. I thought it was one of the better books. That's the book I always suggest. I think it's called Technical Analysis for Financial Market Technicians. It has like a blue hardcover. So I hope that answers your question. Google that. Maybe you'll find that. Okay, silver. Okay, so no, I haven't covered silver. Silver is going to be similar to gold. Let's take a look. XAG. Now, silver has been relatively strong. Oh my, look at that. That's interesting. Okay, missed this one, that's for sure. So silver has been, there's been like a lot of drama talk in silver. This is the weekly chart, right, over the recent few weeks. And now with gold doing that, I guess, the hype train is going to start with silver. Interestingly enough, there was a bullish pin bar over the previous week. I completely missed this, right, because I haven't been paying attention. I got too much other work on I have too much other stuff to do, and I'm missing these moves. Wow. All right, so that's interesting. Certainly a buy signal in play. And I mean, this most of that, this is all today. Okay, so these candles back here are basically that pin bar, and it's a higher low. So what can you do now? Don't chase it. That's the first thing. That's a nice move. That thing looks like an altcoin, right? That's a nice move. But again, like gold, it's going into these resistance areas. So this is where people start to think it's safe. Oh, yeah, silver, it's safe. Oh, there's a massive short in silver. Silver's going to be at $200. Don't worry, just buy it. It's up. See, it's strong. You're buying into a resistance. So I don't like playing this. I don't like the CFD, but and silver, if you're going to play this game with physical silver, you can pretty much buy at any price. It's just really going to be a matter of how much money you're going to invest. There's nothing you can do here. So you buy some silver bars, some coins, not too many, because you're still buying near a high. You can't really play that game with the physical, right? You can't really look at the price and try to trade on a day-to-day basis. It's more of like a weekly or monthly type of situation. Anyway, point is this. I would be on the short term, I'd be looking for a pullback on silver, okay? Look for the pullback. Interestingly enough, we had this initial rally, right? Consolidation. It broke the low side of the consolidation only to turn up in everyone's face. Now, this is a learning opportunity because this is a sell signal and a lower high. That's why you can't have opinions because, I mean, I was talking about this as a short, right? And just like I'm talking about gold as a possible short, and then you get the higher low and it just runs right in your face. The key to something like this is you have to recognize when you're wrong and get out. So initially it says short, and then you get like a bullish outside bar. That's a bullish outside bar is not something that's weak. Okay, so that's your cue to tighten your stop, move your stop, get out of the trade, take your loss, because you're running the risk of this. There's no way to know that this is coming. Okay. So, so this is interesting. Certainly worth to keep an eye on. Look for pullbacks. And the first pullback I'd be looking for is inside this consolidation, which is around what the 19 area, maybe high 18s, right? Silver right now is at $20. So $2 pullback is within reason. Again, this thing can take a week or two to do that, right? So keep in mind, don't get overexcited. When silver does something like this and gold, performs like that, people start to, it brings out all the big mouths. All right. So I'm going to do a couple more questions and I'm going to have to wrap this up. Okay. Anyway, and if I missed your question, I apologize. Hans. Okay. So I covered that. Okay. Okay. No problem. Can you check out sushi? Okay. No. So hold on. Let me just see if there's any quick ones I can answer. Are there patterns you like, or do you prefer more classical? Well, no, I do like double bottoms, and I do like, like basically double bottoms, double tops, higher lows, and candlesticks. Right? That's pretty much what I focus on. Okay. Let me just jump through. There's a lot of questions here. Usually I'll use the simple line, zones, levels. Right. I don't use anything. Right. No oscillators. All that nonsense is just nonsense. Yeah. Keep it simple. Simple is better. Thanks for your answer there, Joel. Okay. Joel's been following me a while, so he knows. All right. What do you think about companies whose stock prices are going lower than their IPO price? Well, there's not much to say about that. They suck. They shouldn't be going below their IPO price, but it's going to depend on their industry. It's going to depend on their balance sheet. If they borrow a lot of money, they're going to have a hard time in this environment, right? Usually small caps and tech stocks have that problem. So I don't really form any opinions about where it is against the IPO price. Again, I'm looking for levels. I'm looking for stability. When it comes to investing, and I do want to know what industry they're in, because I want to know how they're exposed to the economic environment. Some companies may be poised to do better in a rising rate environment or more of a recessionary environment, while others are poised to suffer, right? Because they're going to have their costs are going to be higher and all that other stuff. They can't invest in inventory, blah, 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 right? I don't get all caught up in too much of that nonsense, but I just generally want to know, do they carry a lot of debt? Do they borrow a lot of money or not, right? Now, keep in mind, certain stocks like pharma stocks and biotechs, they're going to do their own thing because they're dependent on FDA approvals and things like that. That's a completely separate game, okay? So they're going to be out of the correlation game. Most of these stocks are correlated to each other, right? So that's why it's important to know what sector they're in. It's important to know, and how that's going to compare to interest rates and stuff like that. You do need to know those things when you invest. But when you swing trade or day trade, those things don't really mean anything, okay? It's important to make sure you understand that separation. Okay, so let me see. Okay, TRY, Tesla missed on deliveries. Oh, okay, man. Okay, they missed all right. Yeah, Tesla is an S&P stock, so that's why I was surprised. S&P up 100 points and Tesla's minus 22 points. Certainly interesting. What stocks are you considering to buy when the Fed flips, or do you feel comfortable investing again? Look, so Alex, I'm actually working on a list. Okay, I got to wrap this up here in a minute, but I'm putting together a list basically of like portfolio targets or stocks that I want to start accumulating, because while the market's pushing lows, I anticipate more lows ahead until the Fed changes its tune. So as the market's pushing lows, I do want to find some good stocks that are cheap, just to start buying small bites of, okay, while the market is probing lows, if we get that situation. And then when the market turns, I'll be looking for the aggressive small caps, right? And that's where I'll be really focused more on what can we do in the small cap area, which ones have high potential, which ones have low float, which ones have, takeover potential, like all these factors I want to look at and put a group of those together, which have potential to, make some crazy moves. But we're going to need free money floating around for that to even be a consideration. So right now in this environment, until we start to get easy money, I'm looking conservative, right? I want to see stocks that basically recession-proof stocks that pay you to hold them, maybe some tech stocks that are generally good but are getting beat up because, you know, they're generally good stocks, right? But they're just not good right now. I don't mind taking small bites of those and just putting them away, but I'm not there yet. So the good question, and I'll let you know when I have that information. I just don't have it yet. I have a lot of other things that I have to get done first, and I'm not in a hurry because the stock market, you know, we're probably not at the bottom yet. I mean, again, I could be wrong, but you know, I don't let the market rush me. That's for sure. Okay. Okay. Just reading through these. I think that's okay. All right. So let me just see what else we have here on the other chat. Maybe I can answer one more and then I'm going to wrap this thing up. I actually think it was my question, but it's not answered. Okay. Which question was that? Missed a question. Gallantly continued without going back. Well, because I can't, you know, I have to move quickly here because I only have an hour. I don't know what question I missed. What question have I missed? It says, yeah, I missed a question. I think that was my question, but it was not answered. Good at all by Han. Okay, what was that question? Is that the book question? I answered the book question. Okay, how do you evaluate targets with about 1,000 points? Okay, hold on. 1K points mean? I reckon it's some percent of price, but I couldn't really figure it out. What do you mean by it? One with points? Well, so I'm just talking about Bitcoin. I mean, if I'm talking about like a Bitcoin evaluation, you know, 1,000 points, 2,000 points, and moves in points, right? So if I buy it at 19,500 and I put my stop at 18,500, right, it's 1,000 point risk. So that's what I mean by 1,000 points, right? So if you're risking 1,000 points, you need to be making at least 1,000 points, right, in something like Bitcoin. Right. Obviously, if something is not moving in points, right, maybe it's dollars, like you know, a stock or something like that, then you have to do it in dollars. All right, that's all it means. So I hope that answers your question there. Okay, and let me just see here. Okay, all right. So I think I got it. Okay, cool. All right, no problem. All right, so good question. Glad I cleared that up for you. All right, everyone, I got to wrap this up. Again, I want to thank you all. If I missed your question, I say I may have missed something. I apologize. I'm streaming every Monday, thanks to 8cap, so you can come back and you can ask me again in my next stream. I hope you got some value out of this. If you haven't read my TradingView article, please take a look at it because, you know, I talk about the levels on Bitcoin all the time and some potential scenarios there. So hopefully you find value in that as well. All right, everyone. So let me just, okay. So again, make sure you check that stuff out. If you have any other questions for me, you can always send me a private message. I have been trying to answer them more frequently. Okay. So, you know where to find me for that. All right. So other than that, I want to thank you all. Enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you so much for watching.